Pinduoduo is not a conventional company. It is mobile in nature and caters to users' habits and needs in the smartphone era. The pin format we pioneered means to share, explore, and purchase together. This model was disruptive. Not only can users find the most value for money products on our platform, but they will also experience more fun when they explore and interact using Pinduoduo. While conventional e-commerce platforms rely on search-based inventory index models, Pinduoduo's platform is designed to resemble a virtual bazaar. We combine the convenience of shopping for a wide variety of goods online with the fun of discovery, typically associated with offline shopping, including browsing and exploring for deals and sharing them with friends. We pioneered PIN, or the team purchase function, through which users can enjoy lower prices by inviting their contacts through social networks to form purchase teams. But cheaper price is not what PIN is all about. Through sharing new findings, you can express yourself while receiving new information from others. Through buying and achieving savings together, users can get a sense of involvement. Value for money products serve as a catalyst for the usage of PIN, but the excitement of sharing goes beyond what can be measured by price. All of this leads to a self-reinforcing, virtuous cycle that is driving our sustainable growth. More users, better user experience, a more efficient supply chain, more fun, and more savings.
There's Luther head going to the basket. Set it up. 拼多多，每天随时随地拼多多，拼多多。Is it me or are Chinese tech companies getting lazier? Pinduoduo, I mean, they don't even bother to translate its name to English anymore. When you translate it to English, it really means puzzle together more and more. Or should I say, more and more puzzling. You see, although China is now the second largest economy in the world, the disparity between rich and poor is still extremely wide. 60% of population, or over 800 million people, are making less than $400 a month. It was able to accumulate a large user base through the universal adaptation of smartphones and WeChat platform, and providing a platform for scam artists and counterfeits that prey on the uneducated customer base, with products such as this true-to-size facial mask and freak of nature Nintendo PS8. But I mean, come on, the least you can do is put your actual users in those commercials. Since you're not going to do that, I am recreating a montage using the actual people that use your app. It could be seen as a platform that connects drug dealers and addicts in the early stage, but claim not responsible since they are not doing the selling. And as controversy grew, they then started featuring less dealers and more end-of-use drugs. Somehow, it has accumulated 487 million people as of the first quarter of 2020. It is almost 200% of the entire US population over 18 years old. Its fast growth allowed the company to IPO on the Nasdaq in 2018. And is now tied with JingDong, which is an electronic e-commerce platform, in market cap, and second only to Taobao, which is the retail brand of Alibaba. The company's aggressive customer acquisition brought its top-line growth, but also heavy losses. But investors seem to bank on the promises of its user base purchasing power and hope to rival the dominant player. Its founder and CEO, Colin Huang, worked at Google during its pre-IPO days and had dinner with Warren Buffett and achieved financial freedom when he was only 26 years old. During his IPO interview, he described his company as a combination of Costco and Disneyland. And here is a clip of the actual TV interview.
You say in your regulatory filing that if one were to close one's eyes and imagine the future of Pinduoduo, it would be a mix of Costco and Disneyland.
What? It's true.
Value for money and entertainment combined. Where does the entertainment come in? And I just want to be sure we're not getting too far from the core of what you guys do. What are you going to be able to do with entertainment?
I would just give you an example. For instance, on our app right now, you can actually farm your own orange trees. You can water it, and you can also steal water from your friends. And once the orange is going to mature, you actually got a physical box of orange.
But all jokes aside, let's just look at the numbers from my perspective as some lower middle class nobody who's only equipped with elementary school math. You see, population in China is not going to grow forever. And as far as statistics go, I really can't say anything with more than 9% of confidence. Just look at these official graphs from the National Bureau of Statistics for its official 2019 population census. It seems like someone was just introduced to Excel linear function, and everything trends in the same direction at a pace that's almost identical year over year. With that being said, use the numbers that we currently have, and what I am about to show you is something that's closer to a Disney World story than what the CEO claims. Let's take a quick look of its funding history since its IPO. In July of 2018, the company IPO'd with a $24 billion valuation and received a total of $1.6 billion through its IPO. Just 7 months later, it did a follow-on $1.4 billion offering. Remember, a follow-on offering is a dilutive event, meaning that they actually introduced additional shares that didn't exist from before. And almost like clockwork, another 7 months later, they issued another round of convertible bond for an additional $1 billion. And if you see the trend here, each round of capital comes exactly 7 months after the previous one. With each additional round, the dollar amount decreases, which is an indication of them realizing maybe there won't be as much of an appetite in the marketplace. And look at the last round, April of 2020, exactly 7 months after the convertible bond issue. They did another private placement for $1.1 billion. And this time around, they didn't even want to bother announcing to the public. And a private placement is basically a round of equity funding through a large institution without coming onto the secondary market. And as we see, the trend is very clear over here. They're unable to raise any significant amount of money over $1 billion. With each additional round, their story just becomes less and less promising. This could be something that he learned through the dinner with Warren Buffett. Even Warren Buffett would say, if you were to do another round, you're on your own, man. So since launching its app in 2016, Pinduoduo grew its revenue by more than 200% in the first year. And it followed its 2017 growth by a remarkable 600% growth in 2018. Of course, it's coinciding with its IPO in the US. Dare anyone to conduct an audit on its pre-IPO financials? Its auditor, Ernst & Young Yao Ming, the same one used by Luckin Coffee. I wonder if there's a way to short private companies. It just seems too obvious and blatant, right? However, its loss also grew by a negative 1,800% in 2018. But who cares? It's a tech company, right? Now, we fast forward to the first quarter of 2020. Their revenue beat Wall Street target and grew by 44%, while user base also grew by 69%. But look at their losses, which grew at 120%, a rate that is higher than both of the other two metrics. As shown in the widening gap, the question is, what's next for the company? Well, the short answer is, it will soon run out of cash again with major headwinds ahead. Okay, now let's take a look at this table against its two largest rivals. At the end of the first quarter, each company claims to have active annual users of 628 million, 726 million, and 362 million, for a whopping 1.7 billion users. And we know only 1.1 billion of Chinese are either old enough or healthy enough to use an app. So there is already a 56% overlap. And any growth from this point on is like taking bones from another dog. We already know Pinduoduo's user base does not have much spending power, as clearly shown over here. Each user spent, on average, only $259 for the entire year, compared to a very healthy $1,300 for Taobao and $827 for JingDong. And because of the low price nature of all the items being sold on Pinduoduo's platform, it is only able to book about 3% of those gross market value transacted as its revenue, compared to Taobao's 5%, and JingDong books around 24% because it is under a slightly different business model. It's not purely a platform, but also engages in buying and selling electronics. Taobao is the clear winner over here with 28% adjusted EBITDA margin, compared to a negative 67% for Pinduoduo and JingDong's 3% due to its higher revenue base. Now let's look at some valuations then. If you consider Pinduoduo's total sales as 1 unit, JingDong does 21.7 units, while Taobao does 10.6 units of sales. Pinduoduo's valuation is exactly the same as JingDong, while it's 20% the valuation of Taobao. And a simple price to sales ratio clearly shows that Pinduoduo right now has the highest valuation of the three. And because of its negative earnings, you have a PE ratio of a negative 36.6 for Pinduoduo and a positive PE of 43.5 for Taobao. And when you divide that ratio further by its growth, we have a negative 173.4 PEG ratio for Pinduoduo. While it's not really meaningful because its earning is negative, having such a high negative PEG ratio means it can go south in a heartbeat if it remain unprofitable. And I just want you to stick with me here as we move on to the next slide. And once I start piecing together all the different information, you will start to see a very clear picture of this story's ending. We are already kind of seeing the writings on the wall here, as in late April of this year, Pinduoduo made a strategic investment by purchasing the convertible debt of another retail store, Guomei Electronics. Guomei is a brick-and-mortar electronic warehouse-style retail store. And what's funny is, there used to be one a few years ago, 2 minutes away from my apartment in Beijing. They used to be a very sizable chain with store sizes very close to Best Buy. Because of the online presence of JingDong, their business was taken away by the less expensive online platform. And now Pinduoduo is trying to strategically align with this much lesser competitor in the electronics market and trying to compete with JingDong, which I do not find it to be the kind of lifeline that Pinduoduo is looking for. By making a move into this field, I think Pinduoduo is already waving the white flag before trying to go head-on against Taobao's core customers. They are waging a war against JingDong, which is a far and behind second place. But what Pinduoduo doesn't have is its shipping logistics as well as storage facilities. So even waging this war against JingDong, I think it's going to be an uphill battle for them. On the plus side, for those investors who do not pay close attention, Pinduoduo can now start booking a much higher amount of their gross market value transacted, because now you can act as a buyer and seller of high-priced electronics. Okay, now we're on to the last chart. That'll piece together all the clues that we mentioned earlier and reveal my findings for why I believe Pinduoduo and its value is only a conceptual idea that only exists in the minds of some analysts, the investment banks that were behind its IPO, its spiritual leader Colin Huang, Huang de Ge, as well as some individuals with ulterior motives. As you see here, the total disposable income was $4,579 per person in 2019, out of which the average person saves about 30% of his or her income, which comes out to be $1,298. And out of the remaining income, another $1,115 was spent on housing and transportation related expenses, such as purchasing of a vehicle, paying rent, or purchasing of real estate, which are not being offered by any one of those platforms. The spending on entertainment, education, and healthcare amounts to another $622 per person, and these services are also not available on the platforms. And the next category is one which the existing platforms claim that they already captured, which is around $1,000 per person. So based on the sales transactions reported by the three platforms, out of the $4,579 available income, there was already $1,000 that's currently being spent on one of the platforms. And after taking out all these expenses, the average person has roughly $289 left on anything that's offline. So let's look at what's likely to happen for year 2020. Based on census, the average income is expected to grow by 5.8% next year. While savings will roughly stay the same, spending on housing and transportation as well as entertainment, education, and Medicare is estimated to outpace the overall income growth. But if we look at the year-over-year growth in the year 2019, all three companies combined for a 42% increase. Now, before going any further, I bet many of you will see this 42% increase as a slowdown pace compared to the 200 or 600% annualized growth we experienced the past couple years, and will not even raise an eyebrow to question its validity as far as the ability of achieving 42% growth for 2020, and may even be disappointed if such number was obtained. What we're about to find out, even such pedestrian growth seems to be an impossible task, as platforms can can brush their transactions all they want and exaggerate the gross transaction value of all the merchandise on their platform in order to achieve a higher valuation, our annual income cannot be faked. And in order to grow average annual income exponentially, something extraordinary has to take place via hyper GDP growth. The most likely scenario for income next year is a projected modest growth of 5.8%. Since future value is already embedded in current pricing, we extrapolate the same pace of growth for year 2020 as the previous year. We will come out with an average per person spending on all three platforms to be around $1,426 per person. Somehow, by looking at this number, it seems reasonable. But without taking into consideration of all the other numbers, 30% year-over-year growth seems very reasonable. But the question is, where is that money coming from? It exceeds all available income by $311 per person. In another word, if we assume there are no other online shopping platforms available, and at retail outlets and shopping malls cease to exist, there is still a shortage. Multiply this deficit by the 1.4 billion population, now we have a gap of more than $435 billion. And to put that into context, it's equivalent to 1,000 Luckin Coffee 2019 sales. Let's reverse engineer the market cap that's currently being inflated. Now, based on 2019's income statement, we know that Pinduoduo is able to convert 3% of the gross transactions as its revenue. So multiply this $435 billion, we come out to a revenue number for Pinduoduo around $13 billion. And we also know that it's currently being traded at 13 times sales. And that will get us to a market valuation of $169 billion. In another word, just within the online shopping industry in general, there is currently a $169 billion bubble that currently exists in the equity markets, but such promise of future return will not be delivered due to the current gap created by the lack of disposable income growth. Pinduoduo's current market value is $80 billion, and given the current economic condition of the three companies, I would think Pinduoduo is the one to exit due to its much weaker financial conditions, diminishing capital raising abilities, lack of cash inflow, lower quality user, as well as its inability to show real possibility of making a profit. Today's day and age, the reason why internet companies demand such high valuations with the advanced technology, these so-called platforms are the perfect fertilized ground to commit financial fraud. Everything happens virtually. We can no longer apply the old eye test. A company worth billions of dollars might not even have an actual physical office. The increasing difficulty and cost of revealing those frauds further fuels the perpetrator's greed because the outside gain also coupled with a lowered probability of being caught. So when punishment and rewards start to unevenly favor wrongdoings, we will as a result experience increasing number of financial frauds until a correctional event that tilts the scale back towards equilibrium. And when the system cannot efficiently correct small missteps and make necessary adjustments, something called a black swan will take place, pretty much like Godzilla, to restore natural orders, if you're into that kind of thing. So when Godzilla arrives, the bubble will burst. All the fluff will just disappear overnight. All things will be restored to order, along with the trillions of dollars printed by the central government to deleverage the economy. And the amount of this missing gap determines the size of the bubble. And the funny thing is, without fail, we pick up every signal and recognize every sign before the black swan, yet we fail to avoid it every single time. It's almost like everyone knows our ultimate destination is death. But until today, no one has yet proven to defy death. And the black swan is almost like a part of nature's healing process, which will eventually take place, therefore inevitable and unavoidable. I mean, just look at this most recent pandemic. Event 201 predicted the exact same kind of virus coming from a bat to a human being. The eerie accuracy of their prediction would have a real legitimate case of having insider information. I mean, the timing of the simulation, including subsequent economic impact it will have, and the potential pitfalls within our system, as well as countermeasures to combat the incoming pandemic. And its simulation projected a much worse casualty outcome. And if you watch their video, it's no less remarkable than identifying the name of the individual bat responsible for transferring the actual virus. However, what they learned through the simulation is the necessary element of collective effort of all countries and governments, including private institutions working together to formulate plans and coordinate public and private networks and support infrastructures to effectively control the disease. But what did we do? Just 2 months later, what happened to working together? What took place was finger pointing between countries, political parties in different states, and between different races. I mean, every time when there's a chance for us to work together, we somehow just default to the law of the jungle. Now, that is E equals to MC squared. So I spent a lot of time and energy, and I came up with the following scenarios that could justify Pinduoduo's current valuation. Number one, the Chinese population is actually closer to 2 billion people instead of 1.4, which I believe is the most likely scenario because my lack of confidence in any official statistics presented by the Chinese government. Two, improbable but possible, which is Chinese GDP grows 34% in 2020 instead of the more likely scenario of 4%. Three, Pinduoduo CEO just beat out the CEOs of Neo Oriental or EDU, Tao Education, and GSX TechDo in a game of Monopoly and took over all of their real-life properties and becomes the only dominant online education company that also sells 15-pound bag detergents. And four, Pinduoduo somehow enters the automotive and real estate industries by creating a market presence equivalent to 2 Carvana.com and 4 Zillows combined. And five, US investors have collectively established a charity fund 3 times the size of Bill and Melinda Gates Foundation to subsidize underprivileged Chinese kids who cannot afford to play PS4 games. There isn't seemingly any opportunity that is apparent in front of Pinduoduo. Any additional market gain will likely be coming at the expense of one of its biggest rivals, who have a much bigger presence, much stronger financials, as well as much more established complementary service offerings, existing infrastructure, and logistics to resist Pinduoduo from taking additional market share from those dominant players, especially not profitably. So the outlook for Pinduoduo is very bleak, and the clock is ticking. Remember, they had gone through an equity funding event every 7 months. Given the most recent event took place at the end of March, I am circling my calendar in late October, early November to see if they will have another injection of lifeline that will support them to live another day. Otherwise, it is a very clear target for shorting. Since CEO Colin Huang enjoys riddles and abstract ideas, using the analogies that you mentioned earlier, yes, E does equal to MC squared. However, since Pinduoduo only exists in a metaphysical world, it can disappear into thin air just as fast as it came onto the scene. And before you know it, not Yao Ming in elementary school, it is more like the Yao Ming in 2009 facing an early retirement from a stress fracture on his foot. Just like an athlete needs his feet, an $80 billion company needs stronger foundations than some philosophical ideologies and user numbers that come up short by billions of dollars that upon a closer examination reverse engineer from hard-earned cash. I hope I was able to present Pinduoduo as a bubble using this approach. And if you enjoy my content, please subscribe to my channel, and I will continue to bring analysis on more Chinese companies going forward. Thank you for watching. I will end this presentation with some relaxing music if you are into Chinese karaoke. For those that understand Chinese, the lyrics are composed by real users.